Okay, so what if I told you that the dizzying, often totally terrifying world of global finance could be completely understood using just three things: monkeys, leaves, and bananas? Seriously. Imagine just for a second that the entire complex global economy is translated purely into a jungle. You've got monkeys trying to survive, and they're trading leaves for bananas. It sounds incredibly simple, right? But as we're about to see, this jungle gets complicated very, very quickly.
Welcome to this explainer. Today, we're breaking down the entire financial ecosystem using a pretty brilliant metaphor. In our jungle, leaves represent fiat currency, the money sitting in your bank account, and bananas represent real, tangible assets. So let's dive right into this and see exactly how everyday monkey decisions scale all the way up to massive global macroeconomic crises.
Here's our roadmap for today. We are climbing the micro to macro ladder. We'll start with the primate economy, move on to borrowing leaves, and talk about growing your bananas. Then things get pretty wild as we look at bubbles, crypto, and hype, followed by the invisible wealth thieves, before finally reaching the top canopy with jungle macroeconomics.
All right, let's start at the very beginning with Section 1, the primate economy. Because before a monkey can even begin to understand global trade, they have to understand their own personal jungle wallet. Let's look at the absolute basic building blocks of wealth here. First, you have an asset. This is a valuable thing a monkey actually owns, like a banana phone, or maybe a banana house. Then you have a liability, which is a debt a monkey owes. Think of an expensive monkey student loan, where young apes borrow an absolute mountain of leaves just to learn fancy big-brain words. Finally, we have net worth. Your net worth is simply your total bananas minus the leaves you owe. It is the absolute true measure of a monkey's financial health.
Moving right along to Section 2, borrowing leaves. Because let's be real, eventually a monkey is going to want more bananas than they currently have leaves for. So they turn to credit.
Now, the monkey bank doesn't just hand out leaves to anyone. They track your reliability using a credit score. In the jungle, a score above 740 means you have good borrowing power. With a leaf card, a monkey can buy bananas now and pay for them later. But there's a catch. You have about 30 days to pay the bank back. If you miss that window, you trigger compound interest. That means the bank charges you a percentage of your growing debt every single day. It can be devastating.
And this exact same logic applies to buying a banana house too. Monkeys use a specific loan called a mortgage. You generally have two choices for the interest, which, remember, is just the cost of borrowing those leaves. A fixed interest rate stays stable forever, super predictable. An adjustable interest rate, on the other hand, goes up and down like a monkey on an elevator. If it spikes, your leaf payments can rise suddenly out of nowhere. And here's a genuinely terrifying fact for you. The literal translation of the word mortgage is death pledge. No joke.
Which brings us nicely to Section 3, growing your bananas. See, if a monkey just hides their leaves under a mattress, they essentially rot over time because things just get more expensive in the jungle. To beat that, monkeys absolutely must invest.
When it comes to investments, monkeys rank assets in a sort of tier list. Up at S tier, the holy grail, we have bananas themselves, real, tangible value. A tier features index funds, which bundle hundreds of companies together for really steady, low-risk growth. B tier is gold, kind of a classic inflation hedge. Down in D tier is real estate. It's great for passive income, but it's highly risky and super expensive to maintain. And finally, all the way down in E tier, we have highly volatile individual stocks and NFTs, which are basically just driven by hype.
So how exactly do you invest? Well, you can choose active investing. That involves watching 30 hours of videos, digging through corporate statements, and stressing out until 6 a.m. trying to perfectly buy the dip. Honestly, it's exhausting. Or you can choose passive investing. This is the calm, steady method known as dollar cost averaging. You just invest a set amount of leaves every single week into an index fund, no matter what the market is doing, and you just let time do the heavy lifting.
But hey, not all monkeys are patient. And that leads us perfectly into Section 4, bubbles, crypto, and hype. This is really the dark side of the economy, where the sheer temptation to get rich quick totally takes over. The absolute crucial point to understand here is primate behavior during a financial craze. When monkeys see a new cryptocurrency skyrocketing, they get hit hard by FOMO, the fear of missing out. They invest wildly with zero research, and in the financial world, this behavior is literally called aping. This creates the absolute perfect environment for a rug pull. That's a brutal scam where creators hype up a digital asset, wait for regular monkeys to pour all their leaves in, and then sell off everything.
The price crashes to zero, and the regular monkeys are left holding completely worthless asset.
But bubbles become exponentially more dangerous when we introduce the concept called leverage. Here's how it plays out. Step 1. A monkey borrows leaves from the bank to buy bananas they can't actually afford, just hoping the price keeps going up. Step 2. The banana price actually drops. Step 3. The bank panics. They issue a margin call, demanding all their leaves back immediately. Step 4. The monkey is forced to sell their bananas at a massive loss. They lose everything, and they still owe the bank. When thousands of monkeys do this at the exact same time, the whole bubble violently pops.
And you know, we're seeing very similar bubble dynamics today with the modern AI bubble. Think of it like a smart monkey arriving on the scene and generating massive, world-changing hype. But when you look a little closer, this smart monkey is producing incorrect writing, making fraudulent drawings, and consuming a massive amount of water just to run its servers. The takeaway here, just because the technology is hyped up and funded by massive corporations doesn't automatically mean it's actually generating real sustainable leaves yet.
All right, now that we've covered the very loud dangers of hype, let's zoom out a bit for Section 5, the invisible wealth thieves. We're looking at macroeconomic forces now. These are the quiet forces that slowly steal a monkey's purchasing power without them even realizing it's happening. The absolute chief among these thieves is inflation, and it actually comes in 4 distinct flavors. First is demand pull. Basically, too many monkeys all want a limited supply of bananas. Second is cost push. The banana supply gets disrupted, so the bananas that are left become rarer and way pricier. Third is production cost. The seeds and fertilizer needed to grow bananas get more expensive, so the farmer has to raise prices to survive. And fourth is monetary inflation. This is when the monkey government just prints way too many leaves, which makes every individual leaf worth slightly less.
But watch out, because there's an even sneakier thief out there: shrinkflation. This is pure stealth inflation. See, guerrilla corporations know that if they suddenly raise the price of a banana to 2 leaves, the monkeys will absolutely riot. So instead, they keep the price at 1 leaf, but they secretly shrink the product. Before you even realize what's happening, you're paying your hard-earned leaf for half a banana peel or a product that's been mixed with cheaper coconut filler.
And all these rising costs eventually build into a terrifying feedback loop known as the wage-price spiral. Step 1. The cost of living just gets too high. Step 2. Desperate monkey workers go on strike, demanding higher leaf wages just to survive the week. Step 3. The monkey bosses agree to the raises, sure, but to protect their own profit margins, they instantly raise the price of bananas at the store to cover that new payroll. The end result? The monkeys have more leaves in their pockets, but they literally still can't afford the bananas.
Okay, time to ascend to the very top canopy of our jungle for Section 6, Jungle Macroeconomics. This is where we look at the massive, systemic forces of global trade that ultimately dictate the fate of every single monkey on Earth.
There is a massive, massive vulnerability in this global system. In our jungle, bananas are used to power literally everything: cars, planes, logistics, the whole shebang. But 20% of the world's global banana exports have to pass through one tiny, incredibly narrow gap: the Strait of Hormuz, or as the monkeys call it, the bendy bit of Hormuz. A single geopolitical shock or pirate blockage right there disrupts the entire global supply. That creates massive cost-push inflation that immediately spikes the price of groceries in every single jungle worldwide.
And when those massive shocks hit, they can trigger a recession. Now, a recession is officially defined by most economists as gross domestic product, or GDP, dropping for 2 consecutive quarters. To put that super simply, GDP is just the total movement of all the leaves and goods in the jungle. When that movement slows down, businesses make less profit, bosses have to fire workers, and then unemployed monkeys obviously stop spending leaves. It's a completely vicious slowing cycle.
To really grasp how bad a cycle like this can get, we just have to look back at history. Take a look at this timeline tracing the Great Monkey Depression. During the Roaring '20s, monkeys were borrowing heavily to buy new consumer goods and investing in a booming banana market. It was a massive debt-fueled bubble. Then, in October 1929, that bubble violently popped, and the market crashed 40% in a matter of days. By 1933, 4,000 banks had failed, and unemployment hit a staggering 24.9%. Literally 1 in 4 monkeys had no job.
So, who exactly tries to step in and fix this? The Monkey Central Bank. And let me tell you, they have an almost impossible balancing act. If the economy crashes, they lower interest rates, which makes it super cheap to borrow leaves. This helps businesses expand and hires monkeys back, but it also acts like a giant King Kong air pump, massively inflating prices. On the flip side, if inflation gets too high, they have to raise interest rates to cool the economy down. But if they slam on the brakes too hard,
They crash the jungle right back into a recession. We have climbed from a single humble leaf all the way up to global trade wars today. As you've seen, the jungle economy is this incredibly intricate web of personal liabilities, corporate shrinkflation, central bank levers, and global bottlenecks. The absolute biggest takeaway from this explainer is that none of us are isolated from the jungle's forces. Which leaves us with one final, pretty provocative question. Armed with all this new knowledge, is your banana portfolio actually prepared to survive the next jungle economic shock?